Okay, so you would confirm that this level has been confirmed. Once it's retested and is confirmed, you would then just sit back and wait for the trend to be over. So you see the lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. But right in here, when price gets back, now look at the lows.
Oh, okay. I see.
And the patterns that are forming. Once you get to levels of support and resistance, that's when the patterns and the candlestick patterns matter the most. For example, this right here would be considered somewhat of a pin. The candle that precedes it that completely moves up and creates the higher high would be considered an engulfing, a bullish engulfing pattern. This right here is also a somewhat of a bullish engulfing pattern. And bullish engulfing just simply means the current candle completely, how can I say it? It completely ate up the entire body of the previous one. A bearish engulfing would look like this. So you see how these patterns are forming at those peak levels. Here's another bearish engulfing. Here's a bullish engulfing. So these are the type of patterns you want to recognize at these particular levels. So if I zoom out here, you can see, let me look for another one. Okay, even right here where we're currently at. At each one of these particular support and resistance levels that we've identified, there is one of those significant patterns at that level. Bearish engulfing here, bullish engulfing here, bearish engulfing here. Here's a bullish engulfing here. Here's another bullish engulfing right here at this. Currently, this was about maybe 2 or 3 months ago on the dollar. But this would be the most recent pattern at a level of support and resistance. And as you see, it's a bullish engulfing. So with this bullish engulfing starting here, you can also come back to look at, this would be considered a double bottom. This engulfing here and this engulfing here at the same level form the double bottom.
Oh, and it also looks like a W, that last one.
Yeah, right, that actually is a W right there. That is it, that is a W right here. But you see how in correlation with the previous levels, this also, now look at this, if you look at it from this perspective, you see an even bigger W.
Mm-hmm. Yeah, it's the formings of one, yeah, for sure.
Exactly. So now you're starting, now you can kind of see and understand how the levels, the peaks, levels of support and resistance are critical for identifying the patterns that form at those levels. Have you ever taken a look at the Candlestick Bible?
No.
Okay, how about you, Brian?
I think I have. Isn't that by who's the author, like Steve Nyson or something like that, or no?
I believe so. I'm gonna put it in the community later on this evening. I'm gonna put the whole Candlestick Bible.
Okay, that's cool.
Did you see the psychology book I posted this morning?
Yes, I did see that one. Yeah, that seemed like a very interesting read right there.
Yeah, it's about 350 pages, but it's definitely a good read. Of course, you don't have to read it all in one time, of course, but it's definitely a good read to help you mentally, because at the end of the day, trading is 10% what we see on the screen. The other 90 is in your head.
Most definitely. And I see where you was going with that with the book, because one of the other students was looking for some type of, I guess
yeah, he was looking for some psychology guidance, and that's exactly why I posted it, because I saw that post last night.
Yeah, I peeped that. Yeah.
Yep, I went through my emotions last year when I first started trading.
Right, and
I
they can definitely be overwhelming and very strong.
Yep. So last year I had made $1,000 the second day I started trading. But
Wow, good deal.
I forgot to, I know, right? I
And
forgot to put in my stop
that
loss.
boosted your head a little too much, didn't it?
It did. However, I forgot to put my stop loss or take profit in because the person that I was initially trading with, he didn't believe in putting in take profits. But I forgot to put my stop loss in. So I'm thinking, let me go ahead and go cash this out. I came back and it was like negative 300. I was like, no, it's like my heart. Yeah. So and I was so quick to try and go back in, to re-up. And I learned from then. I was like, okay, so we can't do this no more.
And that touches on what Bryan
day,
was mentioning earlier about having the growth plan and the compound with the binary. Same thing with Forex. Of course, you can get in there and the market's gonna move, from here to there, back and forth, this, that, and the other. But if you don't have an ideal target and you just let your trades run, I guarantee you 9 times out of 10, eventually the market's gonna retrace back to where your entry is. Because the market's always moving up and down. So you really have to have a trade by trade or a day by day plan. Without that, you'll just be bouncing around and you won't necessarily see anything consistent. So even if I can see an 1,000 pip move, I'm still taking profit along the way, securing my daily goal. That way, once I hit the daily goal, after that, nothing really matters, so to speak. Does that make sense? So
yes,
whatever your daily goal is, once you hit that, take partials. I take partials all the time. I might drop a dollar lot, get 50 pips, take half of it, or even close 75% of it and just leave a quarter running with my stop in profit. So therefore, no matter what happens, the bag is already secured. Exactly. Of course, I might continue to get some more pips off that 25. It might continue to run, but even if that 25 comes back and hits my stop loss in profit, I already secured the other 75% of the bag.
Yeah.
That's beautiful.
So nothing really matters. At that point, it doesn't matter what the market does. I've already made my money. And a lot of people are getting in and think that just because the market's open all day means it's profitable all day. But at the same time, the market is like a rubber band. It's going to bounce back. It's going to expand and retract, expand and retract, and expand and retract. You have to be able, as a trader, be able to know when the expansions and when the retractions are coming, and not just get hit by the expansion and the retraction, because there's no profit in getting hit with both of them. But going back to where we were at here on the top down, now that we're right in here at this new low that retested this previous resistance, again, this series of higher lows in this level is what confirmed that level as the new support, and confirmed it being support from this level here that it was broken. Then, of course, we have the series of higher highs, higher lows, higher highs, higher lows again, until we get right in here. Now we have a lower low. So we could draw the simply line straight across like this. Then, of course, we now push back up, but right in here, you start to see you had the bullish engulfing, but immediately after, we got a hanging man and a bearish engulfing. Then we move over here, price retested this resistance. And as you can see during the retest, I'm gonna remove this one. During the retest of this resistance here, No, look at the patterns in the high and the lows. High, lower high, lower high, lower high, lower high. So that what confirmed this level as the resistance. So now looking at the market, we have a range from here to here. I'm gonna remove some of these levels out of there.
Hey, can I add something to what you just said?
Yeah.
Yeah, so when you were just highlighting the candles and the wicks, I just wanted to point out that that third wick to the high, the one that created that range, the third bullish candle to the high right there, the long with that long wick.
This one?
Exactly. Yeah, right there. Can you say like that's a stop hunt high low?
Yes, that's exactly what that is. And you can tell based on the wick. You see it has a long wick to the upside, long wick to the bottom, and a small body. This right here likely reset the market. And while doing that, as you see, it created a double top.
Exactly.
So now,
What the heck is a stop hunt?
a stop hunt is when the market just really clears the board. So it
Grab
take
the
out
money.
buyers and sellers. This candle
okay.
here took
That
out
makes
buyers
sense.
and sellers. But looking at it as an overall perspective, with this bottom here, with this high here, this bottom here, this high here. Notice how the highs are in the same area now, and these are the swings that are created by the trend on the individual candles. So that's a double top there, and then on the downside we have the low, and here we have another low, another retest. So that's what created this overall range. A range is simply created by swing highs and swing lows being in the same area, which creates which refers to as the sideways consolidation movement. Typically, in a range, you will not see more than 2 touches to the high or low. So with that being said, we've got 2 touches to the high, the double top. We've got 2 touches to the bottom, the double bottom. As price has now shifted from the bottom, heading toward the high, if we can typically only expect 2 touches to each level, then this third touch will likely be a breakout, which would then move price here. 2 touches typically seals the deal. So we got 1 touch to the high, then we had the 1 touch created down here. 1 touch here, 1 touch here. Then this second touch solidified the top of the range. This second touch here solidified the bottom of the range. So at this point right now, we're looking at the high being solidified and the low being solidified. But price has now moved away from the low. And keeping in mind that we're looking at a series of higher highs now, higher highs and higher lows from that level. So with that being said, we can expect price to be heading back towards the high of the range. And since there's already 2 touches, the third touch likely will not stop. That makes sense?
Yes. I had a question.
Yeah.
So this support down here with the at the bottom, so you can classify that as two touches and not 3.
Well, as you look at it right here, this would actually be considered 3 touches. So even with that being said, with 2 being likely the most, and there already being 3 here at the bottom, that's pretty much solid gold as a support level. Solid gold support level. Also, notice how this second double, that wick that we pointed out that confirmed the second high or the double top, that goes back to where when I mentioned that wicks are where price wanted to go, the actual bodies and closes or where prices was accepted or rejected. So keeping that in mind, we can see at this high point, price wanted to go here, but hasn't been fully accepted or rejected because it's a wick. If we look down here at the bottom, we got bodies.
Exactly. Got you.
So price
Makes
was
sense.
accepted and confirmed, rejected. Now, whenever you hear somebody talking about a wick being filled, they're likely talking about a wick being filled that at one point was the high or low of a range. So when we're looking at this monthly, we're expecting this wick to be filled. Even if the body comes up here and the next and it closes there and the next one comes down, that would fill the wick. But what fills a wick is the actual bodies and closes. Like even for this particular wick down here, it was where price wanted to go, but price was neither accepted or rejected until this candle came and filled it.
Exactly.
So when you see things like a huge wicks, expect at some point for price to actually be accepted in that price point, that price range, either accepted or rejected. Even if price had just in this wick to this bottom, price had just came down here with this bearish candle, closed, and the next one went up. At that point, that wick would be confirmed filled. So even looking at that area right there that I just pointed out, if we take this price point and move it all the way in a straight line to the left, look at where it brings us to now. And that's where, once we get down to the next time frame, we'll actually see what happened at that particular price point. So basically, when you're doing your top-down analysis, right here is, for the most part, all we can do on the monthly. So at that point, I would simply bump it down a level. Now I'm on the weekly. Now I'm looking at what I've done off the monthly from a weekly perspective. I can zoom in a little bit. And now I'm going to do the exact same thing I did on the monthly here to the weekly, in line with what I've already drawn on the monthly. So now looking at the weekly, looking at that range, you can kind of see the range very clear. Remember that wick that we just spoke about that was showing on the monthly? This is what formed that.
Okay.
These two candles right here are what formed that huge wick, and that's what that stop pump was. It was a drop down, took out buyers, a run up, took out sellers, a run down, took out the new buyers. It's almost like a seesaw or a whiplash. That with a trap move to the downside, trap move to the upside, and a move all the way down to confirm that resistance.
Mean to interrupt you?
Yeah.
I want to be I guess I want to be fair to Simone, because I know Simone was heavily talking about that gold, and I know you wanted to analyze the dollar just to show the correlation to gold. Does that make any sense? Simone, are you still there?
I'm here. So I'm trying,
Okay.
I'm on my computer so I can see the Zoom better.
Okay.
Okay.
But for some odd reason, I can't figure out why my headset won't work on my computer. So I'm like listening to audio on my phone. But I can hear you though. You're good. I'm here.
Okay.
Okay.
Thank you. I appreciate that.
Yeah, no doubt.
So as you see, now we can actually see that W even more clear, the beginning of it. This would be the second leg. And that's why I feel how this crypto and everything is actually gonna blow up any day now.
Okay.
Crypto is about to blow literally like as we speak. Well, I mean, it started last night, to be honest. Well, no, actually, to be honest, it started about a week ago. It started last Monday, the breakout on crypto. We're gonna see these cryptos make new all-time highs. So any previous highest point, like Bitcoin maxed out at 62 or 67, this next high on this current run will probably be the 80 or 100 everybody's been looking for the past year. Everybody like, oh, it's not gonna make it. Oh, it's not gonna make it. They don't understand the patterns on the chart. Now we're finna go take out 120 on Bitcoin.
Oh, wow.
Yeah, Bitcoin's gonna, like, these next runs likely will not stop on crypto. Like, these next runs are gonna be so massive. If they haven't tapped into crypto yet, they're gonna be running to tap in next. But that's how it happens. And you know, as soon as they buy in, price is gonna reverse and retrace.
Yep. And that's why I'm trying to get in now.
I promise you, as soon as it hits 120 and everybody like, oh man, now it's time to get Bitcoin. Be like, no, nigga, last month was the time to buy Bitcoin.
Exactly.
But honestly, once I think these next breakouts on crypto are going to be the breakouts that last for a while. So although they'll be getting in late, I believe anybody from that buys in from this point on is going to be profitable in crypto. I truly believe that. And if you look at the statistics, anybody that's held Bitcoin or any crypto longer than 2 years has never lost a dollar. It's the people who only hold for a month or 6 months who take the losses. But if you're long-term, nobody long-term has ever lost money on crypto. And that's just simply because price is continuing to bounce. It might retrace, but if you hold through the retrace, you will be profitable when it comes to these cryptos. But I'm gonna go ahead and pop over on gold now, just because that's going to be one that we actually analyze and trade this coming week.
Woohoo!
But again, when it comes to the top-down analysis, you start at your highest time frame and literally find the peaks and troughs, support and resistance all the way down until eventually, of course, you end up at the 30-minute and 15. And once you get to those time frames, based on what you've done on the higher time frames, the patterns and the levels are going to stand out very clear. And that'll show once we get over here on this gold that we're about to do now.
Yeah, I'm glad you said that, because early this morning I was just looking at one of your looking at one of the videos you made on the Udemy.
Okay.
You hear me?
Yeah, I can hear you.
Yeah, and you said exactly what I wrote down. I had to go back and write some stuff down. And you said when you do your top-down analysis, you find your key chart levels from the monthly down all the way to the daily, and then you find your trigger zones from the 4-hour time frame and below, which is perfect.
Exactly.
You know what I mean? Like
that was the key trigger video. That was the trigger zone video.
Exactly. You have the key chart levels and the trigger zones. Exactly. Yep.
Exactly. The trigger zones simply refer to the entry zones when you actually want to pull the trigger.
Okay, cool. Yep.
And that's exactly how it's found. So going over here, I will walk through that whole, pretty much replay that whole video right here live. So starting here again, we're on the monthly, and we're going to do our top-down analysis here off gold. Based on what we can see, here's the lowest swing low point. Here's the swing high point. Now, whether or not you go all the way to the wick that creates that high or the body that creates that high, you have to do one or two things. If you go to the body, which is the open and close, you still have to level off that peak. So it would look something similar to this. This would be the level that was accepted. The wick would be the level of where price attempted. And of course, again, this situation here would be that wick fill, like I just mentioned over there on the dollar. This is a wick fill. These candles here filled this wick. So just looking at this, you can probably already see the M. And this would be second leg over here. Here's the M.
I just seen it. I literally just seen it. I was like, wait, I can't see it. Okay, cool.
There's the M right there. So now that we can actually see the pattern, all we have to do is time in our position right. And to do that, of course, we continue down with the top down. So continuing with the top down analysis here, we've got the swing high over here to the left, still going from left to right. Now we swung down, and here's the swing low. Swing low would be right in here, starting with the first initial swing low right here. So we pull this across. These levels, of course, this was just a dip. If you take a look at the higher highs and higher lows, they were just a retrace to here. And this pattern here started the higher highs again. Higher highs and higher lows. Retraced, bounced again, retraced, bounced again, and then finally went rally for the bullish traders. Now, leading up to where we are here, at this area, of course, looking to the left, we know that this was a resistance area. Based on what's happening in real time, we see this price is being resisted. So now we know that we're coming back to the supportive level, because once we run out of gas and find resistance, in order for price to continue pushing up, it first must bounce. In order to bounce, it has to find support. Looking at this monthly, the support is here. So now with these two levels being resisted, we know that in order for it to push past this level, it's got to get some more gas, or it's got to at least bounce. And the only level to bounce on is right here. So ultimately, based on the top-down analysis, looking here at the monthly, we've got to come back to 1296. We've got to come back down in here. We have to. 1296, 1238, right in this area. We have to come back. So looking at it, let's go ahead and hit these highs right here. Notice how this is actually a range or consolidation area. Look at the highs and lows all form. These it's actually going to start right here. High, low, high, low. Remember that third touch was the break. Yeah, so we got a high of that area, 1, 2, 3, 4, boom. The third one to the top was the breakout. That makes sense, going back to what I was telling you about that third push is likely going to be the breakout. It's very rare you get a triple top.
Yep.
It's very rare you'll see a triple top. You'll most likely see your triple tops on your lower time frames. Higher time frames won't too much show triple tops. Higher time frames are gonna pretty much stick with double tops or head and shoulders. But when you get to the lower time frames, you might see triple tops or even 4. You might even see the range get hit 4 or 5 times on a lower time frame. But on the higher time frames, it's typically 1, 2, boom. And that is an ABCD pattern that you guys likely hear me talk about. I really like to enter off ABCD patterns. This whole W or this whole M right here is actually an ABCD pattern. So if you take your fibs from your low, you take your fibs from your low to high, look at how this retracement came right to the 68 and the 50. I'm going to touch high on the Fibonacci levels throughout the boot camp as well. But you see how the 50 and the 60 played the retracement support.
Oh, okay.
Yeah, I see that.
Mm-hmm.
And then so that would be A, B, C, D. And this is actually what creates harmonics as well. A, B, C, D. And the D leg is what creates the harmonic. So this particular harmonic that this is what they trade on IML. I don't even know if IML is still around, but yeah, they
Right.
they
I haven't
have
seen so many of those.
A, B, C, D, the harmonic, and this would be your harmonic. That would be your harmonic pattern right there. Harmonic patterns are just a series of Fibonacci ratios.
That's actually pretty dope.
So we would be looking for price to come back in here. Ultimately, we could see potentially the price of gold decline extremely a lot. And that's going to be due to crypto. Crypto is going to drive gold's price down to the ground because nobody's going to want gold as much as they want crypto. Like I say, Bitcoin is the new digital gold.
Mm-hmm.
And the patterns on the charts are actually showing that deflation happened. So now, let me clear this off and now continue with the top down to bring us to where we're going to be currently at and trading off the levels this week. So now with finding the areas and everything off the monthly, now let's go to the weekly. Now we're at the weekly candles. Looking at, considering that we know this is a resistance level, and from here, price is heading down. Now we look at how this low, this high, this low, this high is lower than this high as far when relationship to swings. So we know that's a trend down there.
That one I saw. I saw that one. That's lit. Okay, cool.
Good deal. Good deal. So now, okay. All right, so now we know, of course, this coming down to the weekly confirms what we saw on the monthly, confirms that this level is truly resistance because now we have a downward trend coming. And looking here, we can actually pull out the Fibonacci, swing high, swing low. Again, this is another one of my favorite ABCD patterns. A, B, C. C pattern, A, B to C is the retracement. If you look over here to the right, that retracement is at the 61.8 here. I'm gonna change that color so we can actually see it. That retracement of C is at the 61.8. So not only does that confirm the downtrend's beginning, that also confirms that this level's resistance. So now, in order to find that D point that I always talk about, which is going to be down in here, now we use our Fibonacci again, except this time we use the expansion. Swing high, swing low, so A to B, from B to C gives you your expansion. I know I kind of eyeballed that, but it's pretty accurate right here at the 100. And if you look to the left, that brings you right back to structure.
Okay, so that's how you use the expansion tool.
Right, you use the expansion once you have the ABC.
Okay, got you.
Once you have ABC, pull out that expansion and it'll give you potential coordinates for D.
Gotcha.
So as you see on this particular expansion, either D is going to be a double bottom at the 61.8, or it's going to be expansions all the way back down here. In my opinion, it's likely going to be an expansion all the way to the 161 down here.
So in essence, when we look at this this pattern, this price action, when we look at C, point C, can we say that's a lower high? And then we can look at D as trying to form a lower low.
Exactly.
Okay.
Exactly. Once you have
Now-
pretty much 3 swing points, with the third being C, either higher or lower than the first one, you can pull out your expansion.
Okay.
And to
So-
verify C, you pull your Fibonacci from A to B.
Gotcha. Okay. Gotcha.
Okay.
So to verify this C level, A to B. And C is always either going to be at the 38, 50, 61, or 78. Here in this
Okay.
situation, we clearly had it spotted out at the 61. Go ahead, Simone.
So would gold ever retest at 1760, right below the box there? Would it ever retest that line? Or no? Or would it just continue to go down?
Which one? Tell me when I'm on.
Right. You went too far. Right there. You see where you have the box, the initial box? Like, would it ever come up and try to retest that line before continuing down or no?
Likely not. Okay, so now we're now we're done with the weekly here. Now let's go to the daily.
Okay.
Now here on the daily, we already know we're in a downtrend. We already know that the trend is looking here. Coming down here on the daily brings us to spotting out some more support and resistance areas. So if we look here based on what we have right here, you can see that this was a swing low, which formed a level of support. Here it was broken, became resistance and pushed down there. Here it was retested and became support. Here it's still support. Here it's resistance. Here it's support. Here it's now resistance again. So
Okay.
what we'll likely see here is tomorrow or later on today, actually, because it's Sunday, an open here and a straight free fall all week.
Okay. Okay, cool.
So that
Cool,
brings
cool,
us to
cool.
where we're going to be trading off of this week. And I'm going to make sure I leave this markup here. And this is what we're going to trade off when we trade gold this week. We're going to trade off this exact markup that we just did right now. Because what we'll likely do based on how Friday closed, notice how Friday closed in midair almost, right inside of this wick. We've likely hit a level of resistance. If I drop a line right here at the close of Friday, and I look over to my left, that's actually a solid level of resistance. And you can see that based on this structure here. That long piercing candle demolished this level as support and turned it to resistance. You can see the retest here. Resistance, here went a retest, and we see all these wicks being thrown up there. It's likely another rejection. And now we'll continue and move down this in this form. Also, looking when you look at swing highs to swing low situation, we have a swing low and a swing high. So whenever you have a swing low and a swing high, that opens you up to being able to pull out your Fibonacci. And this is what we get. So we got the 0 to 100, a retest to the 100. We're likely going to come back down in this way and end up in our expanded retracements down here to 161, 423, and beyond, which brings us back into the ABCD pattern off the what was that? The weekly. Brings us back into this form. Notice how that 423 takes us back down into here. That makes sense?
Yes.
Yes. You're good.
Good deal. Good deal. Now, is there any questions about any of that? I have another one-on-one to knock